Mr. Brijendra Pratap Singh, Chairman cum Managing Director of NALCO. Mr. Singh, good having you. Thanks so much for taking the time out. And congrats on a very strong quarter. The street would only, one, what went behind this quarter? And two, are all of those elements intact? Because we do hear, for example, that alumina prices have come off nearly 40% from those. So would the tide for quarter four and some of the other quarters be very different than quarter three?
Good morning, first of all. As far as quarter four is concerned, quarter four, almost whatever alumina export we are doing in quarter four, the bookings which were done earlier, the prices are almost same as quarter three. But in the subsequent quarter, after quarter four, that is next financial year, first quarter, the prices will come down, which is now spot booking going on around $530. So that effect will come in the subsequent quarter. But this quarter, a slight reduction will be there, but not major impact.
Only a slight reduction. Fair call. In which case, sir, are you in a position to be able to tell us that this kind of margin that you've clocked in, right? 49.9% was very, very strong, and congratulations on that. Great work. Is that something, the ballpark range that you might be able to clock in quarter four?
Quarter four, again, whatever margins we have gotten, like our EBITDA increase that has been around 161%. Last, if we see nine months comparison, around 3,000 crores increase in the EBITDA, and around 2,000 crores was due to the revenues, and around 600 due to our raw material prices, and around 500 crores due to saving in our power cost. So this same will continue because our raw material prices remain stable, and the power cost will also remain at the same level, because our power cost will further go down because our captive coal blocks, we are increasing the production of the captive coal blocks. This year we will be doing around 2.5 to 3 million ton. Next year we'll be doing around maybe 4 million ton. So, and the difference between captive coal and the linkage coal or e-auction coal is around 300 to 400 rupees per ton. So that will have an impact of maybe 150 to 200 crores on the our profitability. So as far as our cost is concerned.
Got it, sir. So therefore, just a clarity on the questions that I've asked you, just to get my answers, sir. One, nearly 50% EBITDA margin in quarter three. You think you can clock in northwards of 40%, 45% EBITDA, 45% EBITDA margin in quarter four as well? Part one of my question. Sorry.
Will be almost 40%, somewhere around 40% we should be.
40%. Okay, fair call, sir. The second question is, I did hear you say that the alumina price downtick that I spoke about, you mentioned that for quarter four it is still almost in range because you've booked previous contracts, etc. But what happens post quarter four, sir? So because spot prices are down about 40%, is there a commensurate decrease that could come up because of alumina prices correcting so much?
Yes. Post quarter four, alumina prices, which is the spot booking going on around $530. So that will reduce the EBITDA margins, and the overall revenue, as far as revenue is concerned, that will further reduce. But we will have to accommodate by increasing our captive coal production and reducing our expenditures. That will be the thing, by increasing the volumes. Next quarter and next year onwards, we are trying to increase our volumes and reduce the cost. That is the area we'll be concentrating to increase our EBITDA margins.
Mr. Singh, good morning. Tamanna here. Just want to understand a little more detail what has happened in your chemical segment, because that is, of course, one of the big reasons why we've seen a push in your numbers overall. You have had a 78% uptick in the segment. And the operating profit also gone up from 217 crores year on year to 1,287 crores. Can you just take us through the details of where this push has come from?
This push has basically come up from, main thing is the chemical prices, the alumina export prices, which has gone up to around $800 in October, November. And those bookings, spot bookings, which has been done in October, November, still those bookings are continuing. That was one of the major reasons. And the second is the reduction in the raw material prices and reduction in our power fuel cost. These were the three areas in which we have improved. Apart from our revenues generation, we have also improved on our efficiencies that by reducing our raw material cost and reducing our power and fuel cost.
So on all three of these factors, you talked about how prices, alumina prices went up, but you were using spot prices. You already had spot prices from October, November. That will not sustain, obviously, because, yeah. Then you talked about raw material prices coming down. What is your outlook on raw material prices directionally? Where do you see them going?
As far as raw material prices are concerned, the CP coke prices was favorable, and our understanding is that this will continue in the coming month and the coming year also. And as far as our power cost is concerned, the power cost will further will try to reduce the power cost, because power cost is solely dependent on the coal cost and the captive coal. We are increasing the production of the captive coal. Last year we have produced around 2.5 million ton, and next year we'll be producing around 4 million ton. So the captive coal cost of our coal and the cost we used to purchase earlier, the difference is around 400 to 400 rupees per ton. So that will improve our further improve our power and fuel cost.
In terms of the outlook, just trying to understand where you see the outlook in terms of global prices coming in and demand coming in, because right now, Mr. Singh, for your space, for the entire space, the big question is tariffs, right? US is putting in tariffs. India's exposure might not be so much, but what do you think is the impact of all of this geopolitical stress?
As far as this tariff is concerned, which is imposed by US, there can be 2-3 effects, because whatever aluminum was going into the US from 10% increase in tariff to 25%, the aluminum will become costly in the US. And as far as US is concerned, their capacity of aluminum production, which is around 1.2 million ton, they are producing around 0.7 million ton. Many of the smelters are not operating there. So those smelters may come up in maybe next 6 months. So that will increase the production in US, or otherwise, since the aluminum will become costly in the US, the demand may go down in the US. But of course, the aluminum which is going into the US, the surplus aluminum will be available in the other markets, and it will put the pressure on the aluminum in the primary aluminum in the other parts of the world. As far as alumina is concerned, since more and more smelters will be coming up in US, some demand of alumina can increase, because we are not exporting any of the alumina to US. Some demand of additional alumina from US can come.
Got it. Got it. Okay, Mr. Singh, is there any formal guidance that you are ending the year with, or not really?
Guidance in respect of?
For revenues and profitability. You've told me that for Q4 the margins could be about 40%, but cumulatively, you know the 9-month numbers. Are you giving a formal guidance or not really for FY25?
FY25, maybe we will be ending up revenues with around 15,000 crores of maybe the total overall our revenues will be there, maybe slightly plus minus, and EBITDA margin maybe 35 to 40% EBITDA margin will be of trying to end up the year with.
Got it. Well, we will leave it at that, Mr. Singh. Once again, congratulations on a very solid show in Q3. All the best, more importantly for FY26, because FY25 seems to be a rock solid year for you.
Okay, thank you.
Well, that's NALCO, Brijendra Pratap Singh, talking about 15,000 crores of revenues, about 35 to 40% EBITDA margin for FY25. You can do your math on the valuations. The stock lying flat. It's not down really, which is quite something, because the small cap index again today is down 2.5%.